Here's some more proof of why I think Bitcoin will crash, probably by mid-October to mid-November, especially at the time when nobody expects it. This is obviously the chart of Bitcoin with global liquidity laid over top. It's called the Global Liquidity Index. It's basically the amount of money that is floating around in the global economy. Now, if I just make myself a little smaller, you can see it's had a very tight correlation between how much money was being printed and dumped into the system and where Bitcoin went. And it had a very tight correlation until this point, until the ETFs launched. Surprise, surprise. From that point, the ETFs pumped a bunch of money into Bitcoin. It went off on a run, but in reality, the liquidity in the world has been going down. Now, when this divergence happens, usually it will correct. So let's look at history. This was the 2017 run. Money printing took it all the way up to the top. When the money printing slowed down, crypto crashed. And as it was going sideways, Rocky, of course, right when you're doing stuff, the dog goes off in the middle, but we do not stop. We continue. The liquidity was going up. Bitcoin was going up. The money printing stopped and reduced. Bitcoin went down. Went down in these little waves. Little chunks of money got printed. All of a sudden, Bitcoin went off on a run on its own. Everybody thought we were bullish. Everybody thought we were going to a bajillion, fafillion dollars. And then guess what happened? It all corrected back down. And that was COVID. And from that moment, the real money printing started and the real bull run started. Same thing's happening now. Money printing pumped Bitcoin. As money printing slowed down, Bitcoin slowed down. And then, right here, everybody got excited about the ETFs. We're all going to get rich. Bitcoin goes off on a run, does the same thing that it's done here. Now it goes sideways for some period. Now it goes sideways for some period, breaking everybody's heart. Now, I wouldn't be surprised if we go for a little final pump because of this liquidity being printed. We go for a little pump that knocks out a bunch of traders and is effectively a short squeeze. And then we go for something that looks like COVID for this process to reset. So if liquidity is going up and crypto's coming down or Bitcoin's coming down, I think that takes us around that $29,000, $30,000 range, maybe $35,000 range, where this all corrects, it all resets. Now, if you notice, if you go look at altcoins and their correlation to liquidity, you can see that altcoins had a bit of a run on their own and they've corrected themselves as well, but most altcoins haven't had their day in the sun. It's because the liquidity has not been there to take us to the moon. So this is my best proof that Bitcoin will correct, altcoins will probably correct further. And then there's one more piece. If you look at it in comparison to the business cycle, so if you go look at Bitcoin, and you compare it to the business cycle, it's been very tightly correlated with the business cycle for a long time, right? Business cycle goes up, which makes sense. Business cycle goes up with the liquidity. When the business cycle goes up, crypto goes up. When the business cycle goes down, crypto goes down. But there's always this second dip, right? The business cycle goes up and then has this second dip. And business cycle goes up and has this second dip. And now we're seeing the same thing, that even though all of a sudden Bitcoin has completely diverged from the business cycle and somehow magically we're all just going to get super rich with no money being printed and the business and the economy being shit, I think we're going for this second dip. And that dip is going to be some kind of panic state, which allows the Fed to drop rates. In the dropping of the rates, we will see a big sell-off. And then on the other side is more money being printed than we can put a number on. And that is when, ladies and gentlemen, we go to the moon.